Man, oh man, what a day, what a day. Well, another fantastic day comes to an end. I know a lot of you guys made money out there today, so well done on that. But you know what I always say, right? We're only as good as our next trading day, so it's back to work tonight. It's Wednesday evening. It's time to get ready for Thursday's trading session, and we have a lot to cover in a very important video. I have a lot of great trades setting up for tomorrow's trading session. And as always, I'm going to go over all my favorite setups in tonight's video. That way you know how to make some money on Thursday. Before we jump in and get this video going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. If you enjoyed the video tonight, do me a favor, as always, hit that like button. Give me a shout out in the comment section below. I always appreciate you guys tuning in and watching this video, and I do apologize to keep you waiting tonight. It was a very, very busy day here in the office in Los Angeles, but enough of the intro. Let's get ready for Thursday. Thursday, of course, lot of great trades setting up for tomorrow. Well, everything's bearish right now, right? S&P is bearish. Nasdaq is bearish. Oil is pretty bullish. I'll tell you right now, if the buyers get what they want on oil, we'll be up around that $80 a barrel tomorrow. Looking at the S&P and the Nasdaq right now, and we'll talk about this more as we go deeper into the video tonight, there are three big reasons why the word of the day tomorrow is traps, traps, traps. It smells like a bunch of traps, and I'm talking bear traps below the lows. I'm talking bull traps off the high. And so we'll talk a lot about how to make money with traps, how to avoid being the victim of a trap. We're going to talk a lot about traps because you'll see why I say that as we go deeper into the video. And like I mentioned before, if the buyers get their way tomorrow, we'll get a nice little pendulum swing breakout on crude oil. One of my favorite trades, though, is a head fake breakout, a bear trap off the low on oil. Not to worry, I'm going to go over all my favorite trades on oil that you guys are ready to make some money on Thursday. Now, speaking of Thursday, let's get the news schedule in front of us here. There really isn't much to worry about tomorrow. Tomorrow's kind of your typical Thursday. We get the jobless claims report at 8:30 Eastern time. I'll tell you, the lack of any big catalyst tomorrow is one of the three reasons why I'm looking for traps, bear traps, bull traps. We don't really have another big, at least scheduled catalyst until we get that news coming out on Friday, ISM and a bunch of Fed speakers. We do have that CPI number coming out. Where's that CPI number? Italy, right? I believe we're going to get the Italian CPI tomorrow morning. But other than that, though, it's a pretty wide open day tomorrow. One of the big reasons why I would imagine, without any big catalyst, traps could be where the big money, the easy money, is going to be. Now, back to our charts, though, because obviously the money is made on these charts here. And as always, guys, I'm going to go over all my favorite trades on each one of these markets. And I'll tell you, if you like making money, if you like growing your account, if you like winning trades, I would definitely watch this video all the way to the end, because every trade I talk about on this video tonight can be applied to your favorite market. We'll cover the S&P. That can apply to the Nasdaq. The Nasdaq can be applied to crude oil. And I like to wrap this stuff all together towards the end, so I'll give you a reason to stick around all the way to the finish. Let's go S&P first, though. We'll go Nasdaq, and we'll wrap things up on the crude oil. And again, every trade I talk about tonight can be applied to your favorite market, so make sure you watch all the way to the end. First of all, this is an 8,000 tick chart, right? These are all tick charts in the upper left-hand corner. This is the 21 EMA. That yellow line on here is the 21 EMA. And as always, I do give you guys some higher time frame charts down in the description of the YouTube video. I get some updated 4-hour charts, updated 60-minute charts. So if you want to get a bigger picture, a look more of the context or the lens in which I'm looking at these markets, you can definitely grab some more higher time frames, larger time frame charts, which will be a pretty good companion for tonight's video. So make sure you grab those down in the description of the YouTube video. What's the most important factor right now on the chart? There really are three big components on the chart right now. One is we're very bearish overall. So knowing that we're bearish, I will look at this through the filter or the lens of an overall bear market. We're very bearish here overall. The second thing is we get a range right here. And ranges love to rotate. You'll notice a very wide range, and we're kind of rotating now off of that low. And oftentimes these rotations like this, they can really produce some very strong reversals in this example, right? That is the second thing on our radar right now. And the third thing is we're sitting right at those big lows. I've been telling you guys all week, right? In the description, you'll see those 60-minute time frames, and we are basically sitting right on big 60-minute support here. That is the third piece of this puzzle. So knowing that we are bearish overall, we have a range with what really should be some bullish rotation off of that low, and knowing that we're sitting at major support, these are some of the biggest reasons why I think traps are going to be the bread and butter, the name of the day for tomorrow. My two favorite trades on the S&P and the Nasdaq are one going to be a bear trap below that low, and then a lot of it's because of this major support and the range that we have above us, right? So bear trap off the low, and I'm going to talk about how to trade this in a moment, right? But just so you guys know what's on my mind right now. The next one is a bull trap, right? Up above these highs. Again, I expect there to be some rotation off the low, but because obviously every time this thing has popped right up, the bears are coming in and swallowing it. So those are my two favorite trades for tomorrow. Let's break this down, though. What should be happening, what should be happening in all reality is we should be rotating now off of this low. Now, there are ways to make money as we go higher here. You just have to make sure you get in with some bear traps. So as we try to make that rotation higher, I've got my eyes on these areas specifically up overhead here. As we make our way higher, if we can get some nice strength going higher, get some strong moves, some shallow pullbacks, some higher highs in price, I can then use these for, what we call bear traps, just like we talk about in the free trading course. I'd love to incorporate a little hidden channel off of that low. So as we make this rotation off the low and we try to get high enough up here for sellers to have a reason to short this thing back down again, right? Sellers don't want to sell into these big lows. As we're making this rotation off the low, the buyers will be coming in. They'll be looking for those bear traps. Now, again, not my favorite trade for tomorrow, but definitely something I'll be watching for if we begin to accelerate on this rotation going higher. And again, a straight trap setup like you guys are learning in the free trading course. Now, how do we sell it off that high? What's the easiest way to trap in some of these buyers? Well, the word trap is definitely going to come into play here. So if we do get that run going higher now we're up around major resistance, right? Major channel highs up here. It's an overall bear market. One thing we should learn from today is we do not want to chase this thing going higher. That's probably one key takeaway we saw today in our trade room. Whenever it pops up like this, we can be very, very careful trying to buy into it. So hopefully we'll get some buyers that will come in. Hopefully they don't watch this video tonight, right? Hopefully they're not paying attention. Hopefully some buyers will come in and try a couple times, and we can use those bull traps or crown reversal patterns for those shorts going back down again. Think of this now as we go up. The buyers come in, they try to buy it once, they try to buy it twice. Think about now where all their stops are. Think about where all their pain is, right? And we can sell back down into that trading range because, of course, ranges, they act like magnets, right? And you guys learn about ranges in the free trading course. So keep an eye on that bull trap. Now, these come in lots of different shapes and sizes. For example, sometimes they make that big run up. Sometimes the buyers will come in, they'll actually hold that pullback, and they'll actually retest that high. It hasn't happened anytime lately, but again, we're coming off of major support, so we definitely could see a lot more bullishness on that pullback. If the buyers are able to hold that pullback and retest the high, now these become even easier, because now all the professionals who bought off that pullback, now they're taking their profit at the retest the high, and then in come the rookie traders, right, who are chasing after this now. Trap them in, use their stops as fuel, and remember, these types of double top reversals, these types of double top bull trap reversals, oftentimes will plunge back down. And then you can do is, again, the range is the magnet. The buyers are trapped. We're selling into stops up here. In this case, it's called a two-try failure pattern, right? We learn about failure patterns in the free trading course. This would be a two-try failure because the short-term momentum is so strong, right? If you guys are taking that free course right now, 2 tries for the buyers, again, because of that momentum coming off of that low. Once those buyers get stopped out, now what do? We find that new channel off the low, right? Draw it off the lows, bring it right up around the high. And what do we always say in our trade room? First test is the best test, right? I want to short off the top of that channel, right? So think about what's happening right now. We run it up, we trap in those buyers, we're using stops as fuel, and then as we roll over, we're drawing that new channel off the lows, we're finding that channel high, and this could be any of the entry patterns you guys are learning in the free trading course. It could be a bull trap, like in this example. It could be a buyer failure pattern, a one-try failure. It could be a pullback combo, a strength move as we go lower, and again, we know where the market wants to go, right? It wants to go back down into that range. All right, so keep your eyes on, again, all the same entry patterns you guys are learning in the free trading course, which reminds me, I know that a lot of you guys and gals are making money off the setups you're learning in the free classes right now. But if you're here for the first time today, if you're one of the few folks who haven't taken that free course yet, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link, take the free course on our website, because a strategy that you'll learn in that free course will teach you a stupidly simple trick to know exactly where the best winning trades will be each day. And I'll teach you 4 really simple entry patterns to help you start making money on your own account. If you're like me and you hate missing the best moves of the day, if you're not getting the results you want, definitely grab that link in the upper right hand corner. Take that free course. It's perfect for someone trying to make a jump into full-time trading. Now, there's 2 more things I want to go over. Okay, 2 more things going higher, and then I want to talk about the reversal off the low. All right, because that's a juicy potential trade for tomorrow. So don't go anywhere here right now. Now, a couple more things here. Oftentimes, we end up popping up, and because we're so overall bearish right now, there's so many bears up here, it gets crushed right back down again. You know what I mean? Sometimes we don't get that signal. Sometimes we don't get that juicy reversal signal off the highs, right? Sometimes we don't pop up and get a chance to short off the highs. Sometimes it pops up in V-tops. If it V-tops like this, it's pretty easy. Just make sure you don't chase it. Okay, you don't want to sell low, you want to sell high. And the way you do that is, again, if it does go up and get crushed right back down again, that's unfortunately part of the game. Sometimes we don't get that bull trap up there. We don't get a chance to use stops as fuel. If that's the case, market trailing off that low, bring it up around that high. See how I'm going on this? Then look left, find some prior swings, and again, we'll take any of the entry patterns we can grab off this. It could be a bull trap, right? It could easily be getting back above the moving average. Buyers get above, they try to buy it again, foolish buyers, and we can sell right into those stops again, right? We see a lot of those where we'll go up, get crushed back down, pop up, buyers try, and bam, right back down again. So keep an eye on that, right? Again, if it goes up in V tops, right, off of that high, and again, looking for that run back down to that trading range low. Now, I'm sure a few people are wondering, okay, at what point, if we go higher here, at what point does this market actually turn into a bull trend, right? Because if we're anticipating a rotation off the low, I mean, we're sitting at major support, for crying out loud, right? I mean, at some point, the buyers are probably going to get a big correction. That's a very good question. Well, look back in time. Look back in time. What is the one thing that hasn't happened over the past few bounces? Look specifically at the 21 moving average. What is one thing, and I'm sure if you're a student of mine or if you've taken my free trading class before, you're probably screaming out, right, they haven't held the pullback, right? Look at that. Every time the buyers get up, what are they not doing? They're not holding anything, right? They're getting those big pops up, but they're failing to hold the pullback. So that's the secret. If we can get these buyers to pop up And if they can hold that pullback, and remember, again, hasn't happened yet, it will happen eventually, right? It will happen eventually. It may be tomorrow, all right? I love the idea of shorting this top right now, but I will not hesitate. If they do hold that pullback and we blast and we jump off that moving average, okay? If they do hold that, remember, I'm not going to buy that pullback. No way, right? Look what's happened the last dozen times we got above the EMA. But if they can hold that pullback, now this creates a momentum reversal. Now we have what's called a 1, 2, 3, and in these situations, you want to find that new channel, find the new trend line, mark that channel, and then go looking left, find those swings, and grab that first test off the low. Okay, these are usually pretty easy money trades. A lot of time, what happens is on these big bear trends, is you'll get something like this where it'll pop up, they'll hold that pullback, right? We're not getting that crown reversal, we're not getting that bull trap. Right? It'll pull back, it'll jump off the moving average, or what it'll sometimes do is grind, right? Grind like that. Same stuff, right? If it grinds higher, or if they pull back, right, and they jump off that moving average, you'll get that new channel. You'll get that winner off the low of that channel. Again, if this thing holds and jumps going higher, right, that gives us an entry off the low of that channel. A lot of times what happens though is all it does is retest the high. Right? You can definitely make money on that long. Again, they retest the high. Then, of course, the rookies come in. They chase it, buying into the high, and that produces that double top reversal, tumbles back down from there. So don't shy away from that pullback off that low. But remember though, there's a very big difference between a pullback like this that then pulls back, right? That's not the buy you want. Right? They need to hold that pullback, hold and show us, really jump and accelerate off that moving average. Once they show us proof, then we know now we can find that channel and now we can buy that first test off the low. And obviously, guys, I'm keeping it simple right now. This could be traps. It could be a failure pattern. It could be a pullback combo. And again, because we're so bearish overall, my target would be at the high of that, right, the high of that move, and then look to rope in some of these buyers up here. This is way too late, right? You're way too late at that point, right? Especially in a bear market, you're foolish for buying high, right? At that point, though, think about stops. Okay, and then again, light up those stops here with that double top reversal. And if we start to really cook as we're going lower, oftentimes these things will collapse and grind down like that. Simply grab that new trend line, right? And then find that new channel, right? Find those channels and don't miss that first test. So it's basically a variation of that double top reversal, right? This could easily happen tomorrow. Again, it's unlikely right now, but I don't make the rules, right? The market can do what it wants to do here. The reason why I go over these scenarios is because by having these scenarios played out for us, we're ready for anything. It doesn't make any sense to predict the market, right? You make predictions, you limit yourself to what you're getting, to all the tools you have for the following day. So keep an eye on that, right? Keep an eye on that possible reversal into that again, move back down later on in the move. Okay, next big question is, how do we go lower and buy it back up? And how does it break out and keep going lower? Let's talk about that, because of course the Nasdaq is pretty much the exact same thing here on the S&P. Everything, or same thing as the S&P. Everything I talked about on the S&P can pretty much be applied to the Nasdaq, right? So as we go up, all the same game plan I described, they could easily, again, we are overall bearish in the Nasdaq. We have a trading range that suggests we're going to rotate off the low, right? That rotation, of course, is coming off of major 60-minute support. Again, you can find those links in the description of the video here right now. Again, have my eyes on some deep pullbacks here, trapping some of the buyers and short the sucker back down again. The next big question, of course, is as we go lower. One thing I like about the Nasdaq is they've got this 11,871 level. Again, you'll see that on the higher time frame charts in the description of this video here tonight. But I would love to get this thing to trap low, right, or try to make a run lower. A lot of times when you see ranges like this, and of course ranges act like magnets, a lot of times what happens is they'll break out and snap right back up into that trading range. The two ways you want to look for this, I guess 3 ways you can look for it, but the two most common ways are going to be crown reversals. double bottom reversals or V bottoms, right? Now, let's talk about that. Remember, it's an overall bear market. So we have to be very careful picking a bottom on this if it does go lower. It's definitely doable, right? And one of my favorite trades, because this could really trap a lot of bears, it's been very easy for the bears these last 24 hours, right? Everything that popped up, they got sold. So I'd love to trap in some of those, getting lazy bears down here and get some squeezes going back up into that range. If we can take out those lows, again, we're still very bearish right now overall. So we have to rope in these sellers and use their stops as fuel to run back up into that trading range, right? Because we don't have momentum on our side. Right? Momentum is not on our side being a buyer. So in order to absorb that momentum and really give us a catalyst against that direction, we need stops as fuel, right? Again, the word of the day is traps. So on the first try going lower, you want to think about the bears trying once, bears trying twice, and really try to get underneath a prior swing, right? And grab that bear trap. Again, this is kind of a modification of a two-try failure. You want these bear traps right here because what happens is as the market goes higher, you want to already be in that trade. You don't want to be buying it as it goes higher, because what's going to happen a lot of times is there'll be a steeper channel here and there'll be more bears waiting right there to eat your lunch. So you really, when you're going to pick a bottom in a bear market like this, and remember, the only reason why I'm even considering picking a bottom right now is because of major support and, of course, that range above us. It's the only reason why I would consider this. Okay, so it has to be some very specific situations. This is definitely one of them. But again, you want to think about getting in as low as you can on these reversals, right? Because as it goes higher, there's no guarantee it squeezes, right? Again, it's a pretty bear market overall. Okay, that's the crown reversal off the low. It's a bear trap. The next one is they run it down. They retest the low, and we talked about this a lot last night, right? In a bear market, the way you buy the low is you let them retest, right? You let them retest. I'm not a big fan of that short there, by the way. We'll talk about how to trade a breakout in a moment. What I am a fan, though, is once they retest that low, then the rookies come in. They're shorting this thing into that major support. Horrible place to be a seller. We can then again use their stops, right? And very simple. It's a double bottom reversal, just as we talked about that double top reversal, 1, 2, right? And back down. Same idea. Now, the one big difference about a double bottom reversal in this example is that we have to be careful as the market goes higher, right? I like that. I like buying in the stops right here, but you have to be thinking, though, again, channels coming down. So just be very careful chasing these things as it goes higher. If you're buying this market right now, you have to be buying as low as possible. It's worth it because you saw those big reversals that we got every time we hit a low today. So it's definitely worth the attempt for it. They're very lucrative, or they can be very lucrative trades when done properly. But the key though is you just can't chase it as it goes higher, because you're potentially walking right into some big bears there waiting overhead. So that's a second way in which I'm looking to buy it. Those are the two best ways to do it. The other way to do it is a V bottom. Now, V bottoms can be tricky because by definition, a V bottom will put you all the way back up into this trading range. So you've really got to be careful, right? This is just like that V top I talked about earlier. If it V bottoms off of that low and begins to grind higher right now, this is the one where you really got to be careful, right? Again, this one's not going to be as easy because you're buying much higher. Makes sense? Just be aware. You have to get some sort of trap entry on those V bottoms because of, again, anticipating there could possibly be a channel coming down overhead, right? This one, not my favorite, but a definite viable option on this if we can get this entry early enough, right? Obviously, the big problem will be if we V bottom off that low, end up running all the way up like this. Now this becomes a relatively dangerous trade, right? Because now you're walking right into, right? Now you're in an area where we have to be careful with this stuff up there. Makes sense, right? So you want to get those reversals as low as possible. That way you're making money in the trade before those bears come in and pick your pocket. All right, guys? And we'll talk more about that tomorrow morning in our trade room. We'll have a better idea of how that reversal looks tomorrow in the trade room. The last thing about this move going lower, and then we'll wrap things up on the oil, would be how do we trade a breakout? What's a breakout look like on this? So the one thing we've seen the last couple of days is we do not want to sell low. All right, that's one very common theme we've seen the last couple of days. Right, we don't want to chase it going lower. Right, we want to short the bounces, short the pops. So, like I always say, when markets accelerate, when they accelerate out of these ranges, for example, the key you want to be thinking about is I want to get a very large move down, get that pop up, and start looking at using some of these prior lows as key areas of resistance and looking for that short off the top. Okay, that's the key here as we go lower. Now, as we're going lower, the aggressive sellers, they can come in and look for those bull traps, right? If we have a very strong run lower, right? These can be tricky. You have to make sure you have a lot of strength going lower there. So bull traps, right? A trap entry as we go lower. They'll look a lot like this, right? Strong move down, shallow pullback, lower low in price. That trap entry right there. Okay. Once we get that strong move going lower, then we have to back off here and think, okay, it's probably too low, right, to sell down here now. Now we start thinking, okay, where's prior lows? Where's going to be a new channel? How can I now wait for that pop up, get above the 21 moving average? Buyers will come in and undoubtedly think, okay, now we're reversing. We're not in this example because the strength of that move is so strong. We're overall bullish, and now we can go out, trap in those buyers, get those buyers try to buy this thing, and then use their stops as fuel for a run back down again. So think about, as we're going lower, if you're quick enough, if we can see enough strength going lower, grab those bull traps, right? Those trap highs, to make sure you're selling as high as you possibly can, right? That's what traps do. And then as we make that move down, be patient, wait for that deeper pullback, try to sell as high as you can there, and trap in those buyers above the moving average. All right. Another pattern you want to keep in mind here is a pop and grind, right? We might pop lower and the market may grind down. These are pretty common, right? Pop and grinds. If we pop lower and begin to grind down, these are pretty easy giveaways. Just mark off that low, mark off that high, right? Draw the channel backwards, look left, find some prior swings. Traps are, right? Prior swings where traps live. Get above the moving average. Look for that failure pattern, right? Look for that pullback combination pattern. Everything we talk about in the free trading course. So if it pops and grinds down, right, rather than simply accelerating quickly there, if it pops and grinds down, watch those little spike and those little pop and grind channels for that short off of the high. The next big level, well, first of all, don't forget, anytime you have a pop and grind channel, the amount we go below, the first leg is equal to the third leg. Okay, so that will give you a rough estimate of how far this thing wants to go. Okay, we'll talk about some big levels here in a moment. And again, you'll see the big levels with those higher time frame charts in the description. But if you're wondering kind of how big these breakouts could go, the first leg and the third leg are almost always symmetrical. So we'll know this obviously tomorrow. We'll know how big that first pop down leg is. And then once we know how big that pullback is, then we'll know how big that target's going to be. And that'll help you squeeze some more profit out of it. We got plenty of space to go. There's plenty of space down here, and you'll see what I'm talking about on those higher time frame charts. So think about that as we're going lower, and be aware of that possible bear trap off the low here. There's no guarantee this thing keeps on going lower below that big lows. All right, guys, game plan is ready on the S&P and the Nasdaq. The big question right now is will we get this squeeze going higher, this rotation going higher here, or will we try to keep pushing below these lows here? Last but not least here on the crude oil tonight, wrapping things up. And thank you so much, by the way, for sticking around and watching all the way to the end. You are the person I do these videos for, so I commend you for all the discipline of following this along the whole time here. Oil is bullish right now. We're bullish into a trading range on oil, and we have a classic rotation off the low here. These oftentimes will spit and really push higher. As I mentioned before in the introduction this evening, $80 a barrel is ultimately kind of where this market would love to go here for tomorrow. My favorite trade for tomorrow is, my two favorite trades for tomorrow would be, I would love to get a bear trap below this low. Oil has done that a lot over the past few weeks. Every time we've tried to go higher, they've kicked back and trapped low. One of my favorite trades is a bear trap below this low. And then what really should happen right now in all reality is as we're going higher, think about those bear traps going higher. This is pretty much verbatim of what we talked about a moment ago on the Nasdaq, but of course in the opposite direction here right now. Think about the market now going higher. Think about aggressive buyers getting in with shallow pullbacks. As we go higher, though, now we start thinking about finding new channels. We start thinking about using prior levels or prior resistance as support, and we start getting those pullbacks. We start getting below the moving average, trap in those bears with failure patterns, pullback combinations, and again, think about that $80 a barrel as we're going higher. I like that idea. Going higher. Again, this is almost exactly what I just talked about on the Nasdaq, except this one is a bull market. So as we're going higher, right? Think about now as we rotate higher and this market begins to punch and run higher, quickly getting in off bear traps, but you've got to be disciplined, right? If we keep going too far, then you want to think, okay, I don't want to buy too high right now. I'll wait for that pullback. And oftentimes that pullback will come into some new channel, right, that we've drawn off the highs here. Obviously, I'm kind of speculating right now, but that's the general idea here, right, for oil trading here in the early part of tomorrow, right? That bear trap and, of course, right, that deep pullback once we get a little bit too high up. Another, of course, potential variation of this is a pop and grind, right? Pop and grinds are very, very common, right? We pop up, we grind. We may not get that trap. We may not get that acceleration, but it may start to grind going higher. The grind, that slow grind, is always the giveaway. I'm going to mark off that high. I'm going to mark off that big low. And what do? We go looking for prior swings, right? We find swings because swings are where traps live. We try to get below that 21 moving average. Remember, in this example, it's very, very strong. Anytime we have a really strong move in one direction, we're expecting a retest of that high. So at this point here, let that thing pull right back. Let those bears foolishly try to sell short below the moving average. They're walking right into a bear trap. And as always, right, first leg, third leg, that will give you an idea of how far that thing has potential to go. Remember, always a good idea, take some profit at the high, right? Take a good chunk of profit off at that high, and then leave that runner, first leg, third leg, and we'll talk more about those specifics tomorrow morning in our trade room. But that's what's on my radar as we're going higher here. I also like the idea, as I mentioned before, I also like the idea of possibly a bear trap off the low. So as we go lower, bears try once, bears try twice, bear trap going higher. You know, oil loves to head fake right now. I'm not sure why. It could be the situation in Ukraine. It could be the overall, energy crisis we're in right now for whatever reason, blah, blah, blah. But the market loves to get these bear traps right now, or these head fake traps, right? And again, think about this little channel off that high, off that low, trapping those bears, use their stops. Same thing here, right? We trap low, get below those lows. This is not a bear market right now. It's been, as you can see here, there's quite a bit of overall bullishness on this chart right now. So unless something dramatically changes overnight, if we do take out those lows, the head fake, same idea, right? Same idea. Get those bears trying a couple times, trap them right in, and look for that buy going back up, retest the high, and then really potentially at that point now, it rotates again. We find that new channel, and we execute that same game plan we talked about a few moments ago. All right, so keep that on your radar on the oil as well. All right, guys, I'm excited for tomorrow. Big Thursday trading session. As you can see, the word of the day tomorrow is trap, trap, trap. Use stops as fuel. The game plan is already here tonight. I thank you so much for sticking around all the way to the end. I know it was a bit of a late upload here today, but boy, busy day here in the office in Los Angeles. We'll wrap things up here for tonight. Don't forget, all of the additional information you need is all in the description of the YouTube video, all the free course links, all the membership trade room links, all the higher time frame charts. If you need need any help along the way, please don't be afraid to call the office. The easiest way to get support with anything we talked about tonight is to pick up the phone, give us a call, shoot me an email, or use live chat. We're always here to help out. All right, guys, so don't be a stranger. And again, as always, you can always drop questions or comments in the comment section below. All right, guys, I'm going to wrap things up for now. I'm going to rest my voice so I get my game face on for tomorrow. I will see you guys tomorrow morning bright and early in our trade room at 8 o'clock Eastern time. If not, we're going to come back tomorrow night and get ready for a big Friday trading session. But first, we make some money tomorrow. You guys have a great evening out there. Thanks for watching. As always, be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.